Here are the companies with healthy fundamentals and a strong growth outlook. These are the stocks under $10 to buy for 100% returns in the next 12 months. Kinross Gold. Strong balance sheet and visibility for dividend growth as gold trends higher. Riot Platforms. Sustained growth in mining capacity and flexibility to fund further expansion. Polestar Automotive. Robust deliveries growth to sustain with launch of new EV models. Let's dive in. Here are the 3 stocks under $10 that will double in 1 year. Welcome to Timely Investment Research. Stocks under $10 always seem attractive. These stocks allow investors to create a diversified portfolio even with limited funds. Fortunately, there are many quality stocks under $10 to buy at current levels. When I say quality stocks, I mean stocks of companies that are non-speculative. Low-price stocks are often associated with pure speculation. However, some low-price stocks represent companies with solid fundamentals and an attractive business model. Depending on the business development, I would not hesitate to hold these stocks for the long term. Even in challenging market conditions, I believe that these stocks under $10 are poised to double in the next 12 months. The reason is that these stocks are oversold and have positive business catalysts. The balance sheet of these companies also looks good. Let's discuss the reasons to be bullish on these stocks under $10. Number 1. Kinross Gold. Gold trades at $1,830 an ounce, and the precious metal has trended higher by 7.5% in the last 6 months. If my view on a meaningful slowdown and a weak dollar are correct, gold is poised for a breakout rally. Assuming this scenario, I expect Kinross Gold to double in 1 year. From a valuation perspective, Kinross Gold stock trades at an attractive forward price-earnings ratio of 14.2. The stock also offers a dividend yield of 3.2%, and dividends are sustainable. I'd also like the fact that Kinross has a strong balance sheet. The company ended 2022 with a total liquidity buffer of $1.8 billion. This provides flexibility for share repurchasing and pursuing potential inorganic growth. It's also worth noting that for fourth quarter 2022, Kinross reported a free cash flow of $157.5 million. With gold trending higher, the company is positioned to deliver annualized free cash flow in excess of $650 million. Strong cash flow would further support improvement in credit metrics. Number 2. Riot Platforms. Riot Platforms is an opportunity to benefit from another asset class reversal story. Bitcoin has trended higher by 34% for year-to-date 2023. With a weak dollar and Bitcoin halving due in 2024, the outlook is bullish for cryptocurrencies. With a likely end to crypto winter, several crypto stocks are poised for multi-bagger returns. As a Bitcoin miner, Riot Platforms looks attractive among stocks under $10 to buy. As a matter of fact, Riot Platforms stock has already surged by 80% in the first 2 months of 2023. The stock, however, remains undervalued. One reason to like Riot is that the company has navigated challenging times with a strong balance sheet. As of third quarter 2022, Riot reported $255 million in cash and equivalents and zero debt. If Bitcoin's recovery sustains, the company will aggressively pursue its next leg of mining capacity expansion. Last year, Riot increased mining capacity by 213% on a year-on-year basis to 9.7 exahashes per second. Further expansion in 2023 will translate into swelling digital assets and value creation if Bitcoin surges. The company already has expansion plans to 12.5 exahashes per second by the first half of the year of 2023. Number 3. Polestar Automotive. Polestar Automotive stock is another potential multi-bagger that trades under $10. After a deep correction in 2022, the stock is in a consolidation mode and has been sideways in the first 2 months of the year. A breakout rally seems imminent, considering the company's growth outlook. For 2022, Polestar delivered 51,500 cars, which was higher by 80% on a year-on-year basis. The company expects to sustain healthy delivery growth of 60% for the year. Higher sales volume will likely translate into operating leverage and earnings before interest, taxes, depreciation, and amortization margin improvement. This is a key catalyst for Polestar Automotive stock. It's worth noting that Polestar has a strong pipeline of new models. Delivery of Polestar 3 and the launch of Polestar 4 is due in 2023. Additionally, Polestar 5 will be launched next year. The company has also expanded its presence in 27 markets globally. The growth outlook is, therefore, bright. Polestar ended 2022 with a cash buffer of $1 billion. Fundraising seems likely through debt or equity in the coming quarters. However, a robust growth trajectory will offset any potential dilution impact. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.